right, everyone, let's get on to our first panel of the day. What I'd like to do now is invite John Smead to come, who's our sponsor, to come and address us. John Smead.
Thank you very much, Mirama. Tēnā koutou. Good morning, everybody. It's great to see you all here, bright and early. And on behalf of Affinity, I'd like to welcome you to the first panel session of the day. As we've heard already, climate change is a vitally important topic for us all. And I know that certainly we're getting asked by more and more clients to think about what are the potential impacts for their businesses as climate change occurs over the next 10, 20, 30 years. It'll impact us all differently. And we have to look at and consider what are those risks that are going to arise and the opportunities that present as well. It's a complex area, but that complexity doesn't mean that it's something we should just ignore and sweep under the rug and hope somebody else's problem down the track. As I say, while it's complex, we can't ignore it, and it's vitally important. And certainly the quality of the panel that we have this morning reflects that importance. It's a wonderful panel. I'm looking forward very much to hearing what they have to say. I would now like to hand over to Miriama and the panel and welcome them here today. Thank you.
Thank you very much, John. Right, the devastating weather events in early 2023, as we said, reminded us that we are in a vulnerable position. So the insurance cost alone of those weather events is around $4 billion, with the Treasury estimating the overall cost to the economy at up to $14.5 billion. So the prospect of more frequent and severe weather events due to climate change in coming years presents challenges and opportunities, but the bottom line is New Zealand will have to invest and build its resilience to protect lives, property and infrastructure. So the government is planning to introduce long-awaited legislation this year, setting up a framework for addressing climate change adaptation in response to a parliamentary select committee report that set out the objectives and principles in tackling what is a difficult and complex issue. The thorny questions include who should pay, when should we intervene, whose interests take precedent, and when do we compel people to act, how much personal responsibility people must take, and the level of compensation that they receive. The evidence indicates that acting early to invest in mitigation and adaptation measures to protect local communities avoids the huge economic and social disruption that the impacts of climate-related disasters can impose on New Zealanders. So it also sends the right signals to global reinsurers that New Zealand is acting to reduce risk and ensure insurance remains affordable and accessible. The opportunities include avoiding building in dumb places and investing in infrastructure to reduce risk for those in areas vulnerable to natural hazards such as flooding and coastal inundation. So it's my pleasure to introduce our first panel on climate change this morning. Just come on up, guys, when you hear your names. So James Shaw, former Green Party co-leader and climate change minister. So the Honourable James Shaw was the architect of New Zealand's net zero framework, serving from 2017 to 2023. He's now an operating partner at Morrison, a leading global infrastructure investment management company. Good to see you. Amanda Whiting, President, ICNZ and CIAG New Zealand. So Amanda is originally from Perth and has led in the insurance industry for over 20 years in both Australia and New Zealand, and has a track record of fostering innovation in a diverse workplaces that deliver exceptional culture and customer-centred outcomes. Next, Ben Callagher, Chief Risk Officer, ANZ, and also in the Pacific. Ben has over 20 years experience in both the business consulting and financial services sectors in New Zealand, Australia and the United Kingdom. Prior to his appointment, Ben was the Managing Director of Personal Banking. Good to see you both, Amanda and Ben. And last we have Michael Stiasny, the Chairman of Tower Limited. He's also the Chair of NZX-listed Too Cheap Cars Limited and sits on a number of boards, including Tegel Group Holdings Limited, Skyline Aviation Limited and LPF Group Limited. Michael's been involved in many industries over his 45-year working career. Now, a reminder, there will be a Q&A session, so do enter your questions into the app if you want to address it to a specific panellist, make sure that you note that as well. But before we get into the panel proper, let's please ask the Honourable James Shaw to address us and set the scene.
Well, tēnā koutou katoa, ngā mihi nui kia koutou, good morning. I was talking to a former ministerial colleague of mine on Sunday night, actually, rang me up and was asking... Hi. So I was talking to a former ministerial colleague of mine on Sunday night who rang me up to ask me for some advice on how to talk to a group who are starting to advocate that New Zealand withdraws from the Paris Agreement, sort of inspired by Trump and so on. And, we kind of traversed all of the, very sensible reasons why you wouldn't do that. And he said, well, the problem with all of these rational arguments is that these guys fundamentally just don't believe in climate change. And I said, well, I don't really care if you believe in climate change or not. Your insurance company sure as hell does, right? So it doesn't really matter at one point what people think. But there is an inertia in the system, and I think that your industry has got a real leadership role to play here. So there's kind of three things. I was asked to make a few provocative statements just to kind of kick things off, so okay. So the first thing is that the insurance industry, I'm telling you what your industry is doing, and I don't come from your industry, but anyway, the insurance industry will do the heavy lifting on adaptation. And the good news about that is that it means that we will adapt in response, right? That is going to happen. To some extent, it is already happening, right? But that trend will continue. Now, that's quite good news because it means that we will eventually get around to doing the various things that we need to do in order to build the resilience that we need in order to kind of fend off the various floods, fires, droughts, storms, and so on that are coming increasingly in our direction. The bad news is, as you well know, if we leave it only to the insurance sector by itself, and this is casting no aspersions at all upon the industry, but the distributional economic side effects of that will be, shall we just say, really uncomfortable, right? So that is why it is so critical that we do have a framework for how we really clearly allocate responsibility and risk and cost across the property owner, their insurance company, their bank, their local authority, and central government. And in the absence of that framework, you get the kind of ad hoc response that we've had to pretty much every other disaster, which is the insurance industry does what it can, and then ultimately central government flies in with a bucket of money and kind of tries to clean up the mess as best it can, which also means that every disaster has a different response. And that is one of the reasons why claims from insurance for natural hazards, for natural disasters, has been increasing as a share of GDP since 2007. Right, so for 20 years, we've been spending more and more and more on disaster recovery because we just don't have this right, says the guy who was in charge of it for 6 years. So that's the first thing that I wanted to say. The second thing that I wanted to say is that we need more risk-based pricing, not less. And I know that the transition is uncomfortable, but it is so critical that we get that. And any a kind of muting of that signal, I think, needs to be fiercely resisted. I was kind of a big fan of converting EQC into the Natural Hazards Commission. The execution of that, I think, is absolutely critical. I also think that we should take all of the climate change adaptation stuff away from the Climate Change Commission and give it to the Natural Hazards Commission. I think it sits much more comfortably in government there. But the risks that the property owner is willing to take need to be priced. You've got to send that signal, especially in the absence of a really clear planning framework and land use framework, which we keep kind of inventing new ones and then throwing them out. So I think you've got a lot of work to do there. And the third thing that I wanted to say, and this is perhaps the most provocative, is that it doesn't matter who's in charge, central government is not on top of this. Right? I consider myself a friend of Simon Watt's. I disagree with most of the stuff he's doing. That doesn't matter. What matters is that the agencies who are responsible for developing this framework have been going round and round in circles for years and years and years and failing to deliver anything approaching an adequate framework like we need. And so that loops me back to the kind of the first point of what I was saying, is that the insurance industry will do the heavy lifting regardless of what central government does. And we really, we're going to, as that legislation does finally make its way to the light of day, cute little ironic story, we were about to do drafting instructions when Cyclone Gabrielle hit and half my team got deployed to Hawke's Bay. And one of my colleagues said, oh, well, we've actually got a managed retreat situation going on right now. I said, no, managed retreat is what you do before the cyclone hits. This is called disaster recovery and unmanaged retreat. But that was the kind of thing that we were dealing with in central government. So if and when they finally do get a piece of legislation in front of the House, I just implore you all to spend a great deal of time working through that, and not from the perspective of what's in your economic best interest as a company, but what's in the best interest of the country, that you have a special insight because of who you are, and what we can do about that. Because we've been talking about it for more than a decade now. But when it actually comes to seeing it and seeing what it actually looks like and seeing what's proposed, we really do need to, I think, kind of put all of our weight behind that to make sure it's the best response possible. So in that sense, good morning, and let's have a chat.
Awesome, thank you, James. Round of applause, please, everybody. So, as you say, you were the man there for 6 years. Why wasn't that, we can't blame it all on Cyclone Gabrielle. What are the big obstacles to actually getting this framework across the line?
So I think, one of them is the kind of standard dysfunction in the public service, which has kind of been stripped of capability for about 30 years and is completely, ironically, risk averse, meaning that the default position is that anything that the government does carries a risk of failure with it. And therefore, the best thing to do is nothing at all, because that way you can't fail. And what that means, and that is usually, especially when it comes to climate change, the worst possible response is actually to do nothing or make no decisions. And I really struggled to get that message through, which is that continuing to dither is actually worse. Like the status quo is the worst of all possible options. So that's one thing. Second thing is just capability. Like, we just didn't have the capability, and kind of resourcing was a real issue. So I took a cabinet paper in maybe 2018 just to say, look, here are the adaptation priorities. This is what we want to get through. It's a pretty significant work program. It's going to cost some money, and everyone went, yep. We went through the budget process, and I didn't get any money for it. So I then went back to cabinet paper and said, okay, can you just sort of now unmake the decision that you'd make to do all those things, because you're not going to pay for it. But frankly, even when we did get budget for resourcing, human resourcing was really tight. We didn't necessarily have people who had been in the industry or had a lot of experience. And so a lot of it, that's kind of one of the reasons why we went round in circles, is because essentially people were kind of learning on the job around areas that are incredibly complex.
Do you feel like that was a failure?
Yeah, absolutely. I mean,
biggest regret?
No, I've got more regrets. I mean,
that's the biggest.
But it is. I mean, as a kind of component of the work program, adaptation probably was the biggest failure. Adaptation has always been the poor cousin of mitigation, and all the kind of attention is on how we stop climate change from happening in the first place, and it would be quite a good idea if we were to do that. But it was very difficult to get resourcing into the adaptation work program. And the other part of it is adaptation is preventative, and we keep having natural disasters, and so the resourcing keeps going into the cleanup, not into the resilience to the next one.
Yeah.
So yeah, it's a devil of a problem.
So I want to ask each of our panellists what practical steps we can take in preparation for the impact of climate change at an individual, community and national level. But before we do that, I'd really like to go down to you, Michael, and ask for your reaction to James's provocations.
I think I'm in the wrong place, because I wanted to be in the regulation panel, but they wouldn't let me. I think the point I think we need to appreciate is James has been very honest about the the lack of progress in government. And I was thinking yesterday actually whether it's the bureaucrats who've lost control and don't know what they're doing, or the fact that our politicians don't have enough spine to actually get on with this. And I'm still not clear, because I think it's a bit of both, and we're struggling. We're the last place in the world. We're a little bit more woke than everyone else, and we need to get on board. It's risk-based pricing. It's letting people in insurance and in banking, etc., do what we need to do, which is all of you. We also need government and local bodies to step up, and neither of them are doing enough. I mean, allowing people to build in a floodplain. I mean, Mayor Brown, after Gabrielle said, why do we build a Murawai on top of a cliff 3 times? Because we know it's going to fall down. Well, I'm sure if we go back out there today, we'll still find houses being rebuilt, instead of taking the really big thing, which is no houses are going to be built on that cliff, and we're not going to have the problem again. So we need to grow some, and we need to get on with this, because we need to get ahead of it. As James said, we're at the back of a bus instead of being at the front of it.
Yeah. Ben, what was your reaction? What stood out for you in James's opening comments?
Kia ora everyone, and firstly thank you for inviting a banker to an insurance meeting. As you can appreciate, having the title of a Chief Risk Officer, I don't get invited out very much, so I appreciate the invite. Look, it's a wicked problem, right? I think the Reserve Bank Governor said that climate change is the #1 biggest risk to the financial system. He said that back in 2021, and it certainly hasn't changed. For us, when we think about it, we think about it from a customer lens, and we think about adaptation and mitigation. If you start from mitigation first, that's obviously just trying to make sure that we limit the progress of carbon into the atmosphere. And so we've got products that are trying to support customers to do that. And then similarly, from an adaptation perspective, which is unfortunately increasingly important, how do we help customers become more resilient to the climate, or basically the global warming that's already in the pipeline? The thing that we're observing though, and it's interesting, I was talking to Nick Goodall the other day from CoreLogic, and they'd had he referenced some research that had been done, and what we're seeing is that New Zealanders generally and maybe it's not New Zealanders, maybe it's a global thing, but we tend to have short-term memories. So, we have these flooding issues across the country, and they've looked at it on a longitudinal study. And what they find is that over a couple of years, people forget, right? So prices drop, house prices drop in these locations where there's been a bad flooding event, and they drop quite significantly, but within 2 years, they're back to pretty much where they were before the flooding event. So we're not particularly good at trying to solve long-term problems. We've got a system that's generally set up for short-term problems.
Yeah.
And
we're pretty good at it too, aren't we? Good at responding to those
we're
desperate
good at,
emergency moments.
We're good at responding to exactly what's in front of us. We're not so good at looking at the problem further out. So that's a challenge for all of us. And I think it's a system challenge. It can't just be an insurance challenge. It can't just be a banking one. It has to be, like Michael was saying, it has to be across all sectors of society. But it's a problem we have to solve. We have to lean into it.
And if we accept what James said, that central government is not on top of this, what does that mean for us, Amanda?
Wow, that's a big challenge, isn't it? I was triggered a little by the capability comment that you made, James. And I think, yes, definitely there's a capability gap, but there's also a capacity gap, and there's an enduring capacity gap. So we need to have people working on this for a long period of time. It's been a long time coming, and so having an enduring, not driven by a particular political party, but more driven by this is our country's problem to solve, and we need to have something enduring in place is really important. And to your point, Ben, people don't fix their leaky roofs when the sun's shining, and I think that is a real problem, just a human behaviour problem that we need to address. Need to make people more aware of the risk that they are taking. There's a bit of personal choice in that, and a lot more forward planning that I think we need to do.
What are the practical steps, or what is a practical step we can do to get that message across?
I think it's educating on risk, and it's actually having a rating, a risk factor, if you like, or a risk rating on every property in New Zealand, so that we can then start to work through what do we do with the first lot. You called out that we shouldn't keep building in the same dumb places, step one. But step two is, how do we know where the high risk rated properties are, and what are we doing about those? Are we looking at managed retreat rather than unmanaged retreat? Are we looking at how we build differently and support building back differently in events?
I see you nodding down there, Michael.
We've got to do it together. I mean, I think the insurance companies are aligned on risk-based pricing. I think we could all, ICNZ is starting to do this, to talk about going out to the market with every house being specifically priced as to risk, and everyone slowly will get that message, and that's got to be the way forward.
Ben, from a bank's point of view, practical steps that can be taken, how much do homeowners need to actually carry this risk themselves?
When we're trying to help customers both from adaptation and mitigation perspective with different products. Last year, for example, I think we lent about 260 million to households to improve their energy usage, to improve the energy efficiency of their homes. And that's just, that's on the personal side, but on the business side, we're helping businesses become more resilient as well. But I think the biggest thing I think we can all do across the board is just improve the transparency. What we lack is transparency of information. So any party going into transaction ideally would have the same level of base information. I'm gonna buy a house in this location. What are its natural hazard risks? At the moment, we don't have that, and so it's sort of caveat to, and as a result of that, you have winners and losers. And what we're worried about is, we have home loan customers on both sides of those equations, right? So we have customers that will be trying to sell their locations, and customers trying to buy into those locations. And what we want to ensure is that both get have a fair deal through that process. Now that's not up to us, but we think that's probably a good customer outcome and a good societal outcome. So when we're having conversations across the board with the Insurance Council, New Zealand banking industry, with the governments, local councils around how do we collectively increase the transparency of information and make that free, because I think we believe that's important, so that there's a base level of information so all actors in the system can start from there.
James, we talk a lot. As you've said, we've talked for a long time. How useful is measuring and reporting climate change emissions versus taking practical steps to adapting?
Well, you can't do the second without doing the first, right? So you've got to have an information base that you're working from, and Ben's point, I think, is really critical. We were actually getting somewhere with making it mandatory to put natural hazard information onto limbs. Nanaia Mahuta was kind of getting on that regulation. I don't know what happened to it. We set up quite late in the piece we had funded a setup for a climate information centre that was going to pull all the different data and create a sort of a nationwide thing, but I think that program got cut. So there's actually there are kind of hidden in the system. Actually, quite a lot of the building blocks are kind of lying around, and if we were to make a concerted effort on this, we ought to be able to move really quickly to kind of pull those things together and kind of get them into the daylight. But yeah, I think that the piece around information measurement and reporting is completely critical.
So, Michael, then, yes, reporting is really important, but is too much being spent on that at the moment? Could we redirect those resources towards helping the average person adapt to enhance resilience?
We need to break this down into important pieces. So natural hazards and talking about everyone's house and the risks and sharing that information is just totally sensible. But let's be honest, we're all spending a bloody fortune on an industry that has been created out of telling me how much carbon my panel meter's using, etc. None of that is actually all that relevant today in 2025. And we could actually park that and say to half the consultants at our major sponsor or anyone else, go and find a real job. And we've lost our way here. We need to look at it. We need to rate what it is we actually want out of it that we can use. The first stuff is around the houses, but really some of the information we're gathering, the reporting for the Reserve Bank, I see Christian speaking next, is really nonsensical. It's unimportant. It's taking a hell of a lot of time, and we could use those resources far more effectively somewhere else.
Amanda, are insurers developing new products and strategies to address climate change? What's available and going to be available?
Look, I don't think insurance has been known as an innovator in product at all, actually. So we've probably, I can't think of the last time a typical motor vehicle or household product changed. Certainly we have parametric insurance, which is emerging as another product. My real belief, though, is that there needs to be someone who takes a first step here on making that transparency available. To your point, James, the information's out there. It's all there. It's just that everyone gets a little bit fearful when it comes to the point of actually publishing that information, because there are impacts. As Ben has said, winners and losers here, but actually we're just kicking the can down the road if we don't put that information out there.
I mean, it comes back to what you were saying, doesn't it, James? There's the risk of taking risks.
Yeah, I mean, this is a really good point. I mean, our economy is largely founded on the notion of permanently rising house prices, right? So that's kind of the core of the New Zealand economy. And so anything that we do that places any portion of that at risk is a problem for the current homeowner, but also fundamentally for the broader economy, because it's pretty much the only thing that we do. So when you kind of break it down that way, anytime the government or a local council says that we're going to do something like make transparent the information about just what a daft place your house is located in and what poor quality that house is, people go, oh no, you can't do that, that's my, frankly, only asset. And then when you multiply that out across the total economy, it becomes a real problem, right? So when you're kind of gunning for kind of economic growth, and the traditional lever is to pump up house prices so that people put more money on their credit cards, that is a kind of a fundamental problem in our decision-making process, because it creates a colossal conflict of interest around the, in kind of executive decision-making in both local and central government. So there does kind of need to be, at some point, somebody's got to be the bad guy here. And that's, to Michael's point, what we were trying to do with that legislation is to say we actually need to draw a line, and we actually need to tell people what they're responsible for, and everybody is going to come out of that pretty darn grumpy, right? The banks are going to be pretty unhappy with some of it, the insurers will be unhappy with some of it, local government will definitely be unhappy with some of it, and central government's going to have to pony up quite a lot to manage the transition at a time when they're fiscally constrained. So, and frankly, they're always fiscally constrained, even when they're not. Otherwise, I would have had more money to play with. I think there is a kind of a reality check that we need there in terms of just, we need to be kind of hard-nosed about this.
So what do you want to hear from the other panellists today?
Well, one of the things I was just going to comment on, when, Ben's kind of self-effacing, it's lovely to, for you to invite a bank to an insurance industry thing, that was sort of telling to me, because I would have hoped that the banking and insurance industries were really working in lockstep on this, because the interdependence here is like plain for everyone to see, right? You have a one-year product. I buy an insurance product for 12 months, but my mortgage is for 36 years, because well, that's what we do around here. So if at some point, and frankly, I live in a house that's located in a pretty daft place in a city, which is a daft place for a city, and so you would think that the people who own my mortgage are talking to the people who are selling me insurance, right? And that's where your product innovation comes in, because I can, and in fact I have got a sustainability linked loan from my mortgage provider, but if that was sort of geared towards the resilience of the actual building, right? Not just lowering emissions, because that is good, but also the resilience of the building itself, then you would think that I would then be rewarded with lower premiums. But at the moment, I'm not. And so, if we can get increasingly sophisticated about that, then I think we can start to find our way through this.
Mm-hmm.
And it's happening in health, right? Like if I don't smoke and don't drink, I do one of those things, but not the other. But then I can kind of demonstrate that. Then actually, I can generally get lower health insurance premiums. Why does the same not apply to our houses, right? And our commercial buildings.
Well,
and so on?
let's ask Ben what the heck's going on, and then we'll ask Michael and Amanda.
Good question. So first of all, the good news is that we are having lots of conversations with your insurance council, sort of offline, and also with other parties to this, councils. So I think 5 years ago that criticism or that nudge would have been relevant. I think now weekly we're having these conversations, which is good. It's still a wicked problem, right? So one of the things that we've talked about, I look over at Jimmy Higgins here. We've had discussions around how do you tackle it by sort of taking a bite out of it piece by piece, rather than trying to solve the whole thing, because otherwise you just kind of get sort of confused around how do you solve this massive problem.
Are you saying slow and steady wins the race?
So I think just trying to get some wins on the board, and then going from there. We're constantly looking at ANZ. We're constantly looking at how we can tweak our products. I think we've got 5 or 6 products now for personal customers and business customers around both adaptation and mitigation. We're constantly getting feedback, and that's that's the discussion that James was just talking about just then. We're having internal discussions around that. So, I think it's for us, the big thing is we also acknowledge that we have to go as an industry. It's tricky as an individual bank, and I say it's tricky as an individual insurance company, because we will have customers on both sides, as I said. We want to look after both sides of those both sides of the ledger. So it's trying to work together to come up with solutions, and doing it in steps so that we can signal in a long term where we're going. I think that's important, but we give people time. And I think that's really important to see where we're heading, but also the fact that they've got time to make decisions.
Time-ish, because we don't have much time. But sorry to interrupt you, Ben. We can come back to you, but I just want to know. I mean, James is saying I want the banks and insurers to be in lockstep. Amanda?
Yeah, look, I think it's improved a lot over the last couple of years. Certainly, the North Island flooding and Cyclone Gabrielle were a big trigger for that. I remember in the very early days we were going out to the banks to talk about the risks that were on their portfolios and how long they would be for, and I think that has actually driven a change. Yeah. We're talking a lot more as industry bodies. I do think we need to do this as industry bodies rather than individual brands and companies. You're right, we need to just chunk things down here, start thinking about the next step that we can take that actually starts to signal the right thing. I also think there's a bit of work to do around the assurance side of things. So we don't innovate products necessarily, but we do focus in on how do we help the thing from not happening in the first place. And that's, as simple as driver education. So that's a really good way of us innovating. And now we're starting to think about, well, how do we innovate into the climate change space, working alongside corporates around how we can support them to try different technology, etc. But yeah, as far as the banking and insurance relationship goes, I'd say it's much stronger than it has been. It needs to get better, though.
What would better look like? If you agree with that statement, Michael, what would better look like?
I'm still trying to work out whether I do agree, actually. Ben was talking about the 100 on each side of the line. If you lend money to someone for more than a year, then he probably has a financial interest in those 100 that are on the wrong side. We're giving them insurance each year, and then we're reviewing it based on the land and the natural hazards, so I can put my prices up. So in a sense, we're not agreed here, because you want to collect your money in full, and that might be a bit hard if I say the place is going to fall off the cliff. But simply, we should work together we've got to start sharing information so that everyone sees it. So I think that's quite easy. Sorry, it's never easy, but it's possible with the insurance companies. Jimmy and Amanda could agree today and everything would happen because we'd all follow. But we also need to keep coming back to local body and central government have to come to this table. And I do need to say something about the natural hazards. Treasury, most people say Treasury are the best people in government intellectually. They've come out with the most craziest idea of increasing the amount that EQC, whatever it's called today, is going to pay out. It goes right against risk-based pricing. Now, you would have thought that in 2025, again, they could not put that out as a good idea. So we've got a whole lot of work to do in Wellington yet before we are going to get everyone to work together.
I heard a little snort from you, James. I'll come to you in a moment. But before you give that away, actually, Ben, you can address this. With these risks around climate change for insurers and for banks, is there a case for both sectors to work together to effectively advocate for government action?
Yeah, I think we're doing that already. I mean, we had Minister Watts, who's coming later on. We had him with our board last week, had a really good conversation around what we're seeing, and likewise, he did the same with us.
Anything you can share?
I'll let him share that later on. But I think like the reality is that there's we're forever having conversations. I mean, one of the things that, for example, insurance companies could do for us that would really help the banks is give more certainty to customers around insurance. I'll give you a good example of that. I had a friend recently who's buying a house that is on, or potentially going to buy a house on a waterfront, and I said to him, well, make sure that you call your insurance company first to ensure that they will insure that on a permanent basis, or just to get some certainty around that. And he spoke to them, and he was like, oh, yeah, they'll insure it for a year. And I'm like, well, but your mortgage is going to be, to your point, your mortgage is going to be 25 years, right? So we need to be better at giving a bit more certainty, I think, to people. And that's that transparency in the system. And I know that's hard, right? Because who knows what's going to happen in 5 to 10 years in terms of the climate. But generally speaking, I think we need to get better, and that will help us give certainty to customers around lending, but it'll also give them the confidence to invest. And the one thing that any financial system needs is, basically the thing that the financial system doesn't like is uncertainty. And so we will, as a country, we will pay for that uncertainty through lower GDP over time.
Amanda, your response, and then we're coming to James.
Yeah, interesting, given that we're in the business of uncertainty, effectively. And I guess what you're asking is we need a single risk indicator that everyone lines up to and says that is the risk that insurers are prepared to accept for a period of time. I don't know that it'll be for 20 years, but it might be for 5, right? So then we can do that. We can agree on a particular, it might be 1 in 100, might be whatever we want to land on there. Then that can support us to actually ensure that we can be there for those customers for 5 years. But to do that, we need all the other stuff. So what are all the risk indicators that we've got out there? What are the adaptation policies that we have in place, and what will be the sorts of actions that local government need to take, as well as central government? It's not just, well, let's look at that property and that's fine. There's a lot more around that. Yeah.
Okay, let's address Snortgate. Your reaction to...
when Michael said, that we think of Treasury as the kind of smartest people in government, I looked at Chris, because I'm not sure that we would be amongst the people who necessarily would agree. It's not a view held amongst most ministers. I mean, if you could do that, right? If you could get that sort of indicator and then some kind of forward curve where it says, like your insurance is, for the sake of argument, it's, $10,000 this year, but like by the time you get to the year 2062, when your mortgage runs out, it's likely to be $800,000 a year, or we're just going to withdraw the service. And that's the period of time that the mortgage is for, then I think you should not get a mortgage, right? The banks shouldn't be loaning on things where there is that level of future risk that it becomes uninsurable. It's kind of bonkers to me that someone would go and loan you $1 million or $1.5 million with very little sight of whether they're going to get their money back by the time the mortgage is it's kind of finalised. So, yes, the industry needs to keep lobbying. Your industry has been lobbying government for donkeys, right? I mean, Bryce was in my office at least once a quarter, and was probably the most useful person who ever was in my office, other than the people who actually worked there, who were brilliant. But that is a necessary but insufficient condition, right? Local government. It's astonishing to me. Is it like 1,500 houses that have been built since the anniversary day floods here, in floodplains? When you've got a mayor who, when those floods were happening, was saying how dumb it was that those houses were there in the first place, and he was right, and yet we just keep on doing the same thing. I don't think that central or local government are going to get their act together until there is a real threat, right? And frankly, that can only come from the banking and insurance sectors, where you say, and actually, Tower spurred the government into action in Wellington around risk-based pricing for earthquakes. It wasn't a pleasant experience for Tower, but it actually got some movement in amongst our agencies. And so I think, you can keep the conga line of people informing ministers about the nature of the problem, but until until this problem really starts to land on Treasury's desk as, you have a $17 billion or probably much larger problem here, and you need to deal with it in the next few years, or we are withdrawing services from your voters, then I just don't think that you're going to get anything other than the most flaccid response.
Well, let's ask the rest of our panellists, what's it going to take to stop houses being built in floodplains?
The simplest answer, and this is, I think, where we will be heading, is that insurance won't be available. And I think that is the first place that we could start as an industry, because if you think about it, there's not someone already there. We just need to get in really early before development actually starts and make very public statements that this is not an insurable piece of land if you build here.
And the writing's on the wall anyway. There is some warning around that. Ben, what do we do?
In very simple terms, if they can't get insurance, we won't lend. So it's got a truck and trailer. And that's why it's important that we're joined at the hip, because we can help with those conversations.
Aren't we fooling ourselves a bit? The reason why it's being built on a floodplain is it's to the lower end of the market. The lower end of the market, unfortunately, is going to be taken to the cleaners by the developer. Already with the council in tow, they will come up with some form of mechanism that provides comfort, albeit I don't think it'll be real, and we will still be sitting there saying we're not going to do anything there, no bank, no insurance, but it will still happen. So James is right, it requires the government to do something bold, and we've just learned they don't do that unless we push them to it.
That is where just decent planning rules, which is something that is a solved problem in many parts of the world, should happen. Like I said, we got really close, and it may still be somewhere in the system. We had some direction, national direction, coming out under the RMA, which actually Nanaya referred to as the stop building in dumb places rule. And local governments were asking us for that because they didn't want to be the bad guy, which is fine. Like sometimes it's like, okay, well, central government will just dictate a rule, and that would really simplify things. And Michael is absolutely right. The combination of, if it's cheap land because it's floodplain, someone will work out a way to do that. And then you combine that with what Amanda was saying about how, or Ben was saying about how we have short memories as humans, and that is not a uniquely New Zealand thing. If you look at New Orleans, when they built the levees around New Orleans, back in the kind of 60s and 70s, there was a whole series of projects there. And they said at the time, for God's sake, do not build behind those levees, because if those levees fail, it will be catastrophic. 30 years pass, all of the people who are involved have kind of retired and moved on and so on and so forth. And then somebody looks and go, gee, that land's nice and close to town and it's real cheap. And we did the same thing here after Cyclone Bowler. We said no one should have cut down those forests in the first place. Let's plant a whole bunch of pine trees on them because they're fast growing and they can hold up the hillside. And those have got to be permanent. And then 20 years later, somebody said, well, there's a lot of quite good wood there. Why don't we clear fell them?
We did the same thing in Christchurch, didn't we? Let's go to some questions from the audience. Before we do that, though, quick story from me. My mentor used to say, every good journalist has a pen, every great one has a piece of paper. Today, I can say that every good MC tells everyone how to download the app. The great ones have actually done it themselves. That's not me, I'm afraid. So I'm going to ask my team over here to lend me your computers or whatever so that we can get to the audience questions. Well, just while you line that up, we'll come to one more question from our panel. What have we learned globally, like the LA fires? What lessons can we take from that?
I think that's the first time, actually, that I've had a lot of inquiries around what will this mean for my insurance product. Up until then, really, it's been that reinsurance is sort of something that we buy locally, and people don't really understand the capital that comes in globally. So I thought that was a really interesting shift with the wildfires, definitely, where people they've made the link, which they haven't done before. So I thought that was quite interesting, along with all the human behaviours we've just talked about, where why we've got cities where they are, etc. But yeah.
Michael, how are reinsurers looking at New Zealand?
We're pretty positive that reinsurers are looking at New Zealand pretty well at the moment. They're looking at us very well because of our risk-based pricing lead. So I think that's okay. I found the most amazing thing out of California was that you got to remember these were really nice houses in a really nice place. So those people took the risk of building a house that they knew they could never insure and said that's just the cost I'll bear. So it's completely different. Sorry, some of them are completely different than floodplains. You can afford not to insure if that's what you want to do for some people. Most people can't.
I think just one other thing on that. Market failure occurred in that state, and it occurred because government pulled some levers that actually had unintended consequences. So they set prices for insurers couldn't risk rate, they pulled out, then there wasn't enough capacity in the market. So I think it's something we should pay attention to.
One of the things that we worry about is underinsurance as well. So there's no insurance and there's underinsurance. I don't need to explain that to you because you're talking to your insurance institute. So I think for us, when we look at this, we have looked overseas, and one of the things that's really interesting is over in Queensland, where they have customers, and it's quite frequent now, where they have customers that only insure for the bushfire season. That's rolling the dice, right? Because bushfires just don't go, oh, don't worry, it's January now, we can stop, or it's April, whatever. So what we worry about is, and I think they found this in the States as well, is there was obviously a strong group of customers that sort of self-insured for a better term, but also there were customers that they found that were really underinsured, and that's almost just as bad as having no insurance, right? Because it's catastrophic financially. So that's something that we're trying to grapple with. Is we will check people's insurance, but then it's really difficult to know how that changes over time for them.
So a question from the floor. Some insurers are already risk-based pricing. What do you think is holding the rest back?
Nothing to manage.
I don't know who isn't risk-based pricing, actually. I think we're all risk-based pricing to some degree. I think one of the biggest challenges as IAG is that we're really conscious that many of the communities that will have significant price increases are probably the most vulnerable communities. So they're already there, and I think we have a role to play in educating before we just pull out. So that might be what people are seeing. They might not be seeing full risk-based pricing, but I think every insurer that I know of is risk-based pricing.
Aren't we being too hopeful that a better understanding of risk will be enough to solve the problem? Isn't that just the start of the problem? Who'd like to take that? Yes.
So I completely agree with the sentiment of that. And I mean, Michael actually sort of pointed to part of the issue there is that that's kind of what I meant by saying that the insurance industry will do the heavy lifting, whether or not the other kind of key stakeholders get involved, which means that there will be an adaptation response. It's just like there's an ugly response and then there's a really ugly response. So it's like which version do you want? And I actually believe people should be allowed to make dumb decisions. And I mean, humanity has demonstrated over and over again that we're really committed to making dumb decisions on an ongoing basis. So you can't prevent that. But you should make sure that if they choose to make, that they should be able to make a choice, i.e. they're informed, and if they want to make that choice and then say, well, I'll just bear the consequences of that, that then needs to be backed up in legislation, because one of the things about rich people is they have really good lawyers. And so they can say, look, I'm going to build a house in a really, say at the top of a cliff in a really kind of disaster-prone area, and I'm prepared to actually self-insure on that basis. And then when disaster strikes, they will be the ones who are most able to affect the government levers for the disaster response and recovery response, so that they get sea walls and retaining walls and all that kind of stuff, while the poor people who live in the floodplains are left to their own devices because they don't have legal teams the size of the people who live at the top of the cliffs. And that is like the single best argument for government intervention at that point, right? Because I believe if people want to kind of to make a stupid decision, they should, but that the consequences of that then need to be clear in law, that when disaster strikes, it really is their problem, and that is not currently clear, and that is why we have billions of dollars, frankly, accumulated going into places over and over again, which are really high risk, but where there's quite a lot of QCs who live along those roads.
So, Michael, how can we incentivise or reward adaptation investment when in many situations it's so difficult to break even until a major event occurs?
That question's a bit beyond me. Can you say it again?
Sorry, let's try that again. How can we incentivise or reward adaptation investment when in many situations it's so difficult to break even until a major event occurs? And Amanda, you might want to address this.
You might
too.
answer that, Amanda. I don't know what it means, sorry.
I'll give it a go. I think that's a really good question, actually, because that's what prevents a lot of the investment that we need for the adaptation work that needs to happen. And it is, that you open, Mirama, with who's going to pay for this. I do think there are ways that we can do this. There is a lot of capital available in the world. And I don't want to use, no one likes toll roads, for example, but a lot of capital is available, and you can imagine a time where people will pay for something to not have happened, rather than to pay for, to pay for insurance to pay when something does happen. So I think we can get quite creative with some of the opportunities around paying for adaptation.
What would be one example?
I think just bringing in, I've been talking to investors lately around what could that look like, and it is a completely different structure to what we have today. It is about getting people, first of all, they have to believe that climate change and adaptation is super important and one of the country's biggest things to overcome. They have to understand the risk that they're solving for and be really comfortable that, that risk rating factor or whatever it is I talked about before is going to shift down. And then they have to get the funding model right so that the people who are getting that protection are paying in a different way. So, it's a bit out there, but actually I do think we can look at constructing deals differently for adaptation.
Okay, so let's come to you, Michael, for this question. What would be your frank and fearless advice to the current government?
I think they have to lead. And if they were going to lead, I believe from what we've heard today, the insurance companies will join in. I think we've heard from Ben, they have issues at banking, which would imply they will join in. Whether local government will join in or not, I can't answer, but you could pressure them to, and that's the only way we're going to make progress.
Anyone else want to address that one? What would be your frank and fearless advice to the current government? Ben?
No, I think Michael's summed it up well. I think we all need to go together, but they need to help us, and we need to help them too, right? So we need to bring ideas to the table as well. I don't think it's a one-way street, but I think we need to do it together.
What's the one thing you want to hear today, James?
Well, I'll be interested to hear what Simon's got to say next. I think there's a lot riding on that bill when it comes in, and so whilst he's not going to tell us the detail of it, I'd like some assurance that it's actually going to happen this time.
How optimistic are you?
Well, like I said before, I think there will be a bill. The quality of that bill is what worries me, and whether it actually addresses kind of some of the fundamental issues that we've got here, because there is a sort of a de minimis probability, I think, where it's like all it does is provide a platform for information sharing, and that is not going to get us where we need to get to.
Anyone else want to address that? Michael?
I was going to say it'd be a start.
It would be a start.
We need to get a little bit further beyond a start, though, don't we? So the government has released its initial response to the Finance and Expenditure Committee's Climate Adaptation Report. What is your reaction to that, and how far have we come? Let's start with you, Michael.
We're starting. It's not enough. We go around in circles. We just have to do more. Get on with it.
Ben?
Yeah, I agree. There's more work to do, but we're talking about it, which is the start. But I think there's a lot we can do. I think, to my point earlier around, we can wait for government, but we can also do stuff ourselves. And I think we will, if we wait, we will be at risk of not taking steps where we could actually practically take steps. So that's why we're having conversations with insurance councils, bipartisan conversations. And that seems to be working pretty well.
Look, I think it's a really good start. We went to London with the Minister to talk to the reinsurers. If we can pull this off, actually we'll be global leading. The challenge is, how do we get started? And I also think we have a really important role to play in this.
I mean, it was the shortest report I've ever read, which has some advantages.
I was going to say, is that good or bad?
Well, a lot of government responses are so turgid you've got no idea what you've read. This, at least you could get clear about it, but it did worry me because it was so thin, and I kind of, my heart sank a bit. I thought, God, if that's all we've gotten after 8 years of talking about it, then that's kind of where you're hearing some of my anxiety coming from. And and do not wait for the government. And I know you're not, but definitely don't. Like, my number one advice to any business group is, do not wait for the government. But make sure that you're kind of supporting them to be making good decisions as best you can, and giving them the hurry along as best you can.
That sounds like your call to action. Is that fair to say? We're going to wrap in a moment, so I'm going to ask everybody to offer your final thoughts. Is that fair enough, James, or anything else to add?
Well, yes, if you don't mind me taking the time, because
You've got 30 seconds.
Something that I'm not famous for being brief, but one of the things Amanda said, I think is a really good point, which is to come back to this piece around innovation and trying to find new ways to solve these problems. And you asked for an example. One of the things I'm working with as an investor is trees, frankly. They're really good for resilience purposes. They do things like hold up hillsides, and we need a lot more of that. And so paying for, permanent indigenous, biodiverse, resilient, fire-resilient native forests could actually become part of your insurance strategy, right? And part of your banking strategy and so on. That's the kind of innovation that I think that's kind of the next phase for where we want to get to. So my call to action is to kind of innovate and to kind of just kind of be pushing out on this stuff, because the government will catch up eventually.
It's funny in New Zealand, isn't it? We always say kind of just do this or kind of, but you're really saying innovate. You need to innovate. You need to move fast. Amanda, what's your call to action?
Look, I think we've got to be bold. We do actually have to just take a step forward with this. So, I mean, I know that we were working on the ICNZ strategy in the last week. The ambition is to be bolder around some of this stuff. So I think you'll see some good change there.
Ben?
We're both, if you look at insurance or banking, we're both in the business of managing risk. So we're pretty good at managing the banking credit risk, financial risk, but this climate risk is generally a new thing that we're all having to grapple with. But to my point earlier, we need to start focusing on it now, because this is a long-term problem which needs short-term solutions building up to a longer-term solution. So I'm optimistic. I don't think we should leave here and sling nooses over the rafters or anything like that. But we've got to, we do have to collectively work on it together. And to James's point, I think the private sector can do a lot without necessarily waiting for government to come in.
Michael?
So why wouldn't it be good if ICNZ said that in 6 months' time, there will be a platform available to every person in New Zealand about the risk, and we as insurance companies all agreed about the risk for each house. That then puts pressure on the government to do something, because we've taken the easy step.
6 months' time, everyone. That's the timeline. It's a good provocation, I think.
Chris has to go home now. He's got to start work on that.
Yeah, that's right. Yeah, the work starts now. I want to thank each of our panellists. We've got a wee gift for you to say thank you for your wisdom, your expertise, and your whakaaro this morning. It is so appreciated. Thank you so much. Here we go, Amanda and James. This is for you. A big round of applause, please, for our incredible panel.